All right, guys. It's aftermarket close on Friday afternoon. I had some questions come in on a bunch of emails. Everybody wanted to know what was going on here with the ranking jumping from in the 400s up to the 3000s. The only thing I can gather from it is their algorithm. I've actually only been posting this one particular account um, on Tipranks for what the last 6 months. I think it was November. It came right down to 6 months. So I'm figuring that their algorithm, they try to keep parity in there because if you have somebody that's new and they jump on there and they do one trade and they make a winner off that one trade, they buy it and they sell it and they made a profit off it, then you'd have number one forever, right? You would never have to do anything else. So that's what I figured they've done. The people that aren't serious about, trading or investing or just trying to get their name out there or for whatever reason, that's probably what's behind it. I don't know their algorithm, so I can't say. But I went into this, with transparency to show people that, what I'm doing is legit. So if their algorithm is correct and that number is correct, then, I'm uh, in the top percentile now. So anyways, uh, looking down here, it says success rate and average return. Uh, it's a real simple formula what they've got there. Um, that's not where your ranking comes from. There's probably has something to do with their algorithm. I don't know exactly what it is, but if you take 218 profitable transactions and divide it by the total number of transactions, you come up with 0.50 and you multiply that by 100, that gives you your percentage. So 50, and that's where you get that 50%. So the average return, obviously, it's kind of hard to say how they're doing that, but if you look at their information, um, it will tell you, just look under these little eyes, what's actually going on. So it says average return per transaction. So I mean, it's kind of hard to say, well, if these were all, if you had 100%, then this would probably be more accurate. But because I hold, I do not use stops. I think everybody, if you've watched for any amount of time, you'll figure out that I don't use stops because I invest for the future. I don't, it's not short-term trading. Even though I do short-term trading, it's because I'm trying to gain more occurrences. And so if you listen to me at all, occurrences is where it's at. So we're coming down in the market right now, but hopefully that answers everybody's questions. You can see that we're outperforming the S&P, so almost by what? Funny enough, 12%. What are we looking for? 12%, right? So if we can stay above that, of course, if the market comes down some more, which it more than likely will, this gap in here will probably be maintained. Um, we still have quite a bit of cash to go to get fully vested. I think this one account's at 23,432, and see some of the other ones. I think combined these two accounts have another 93.85. So we're not adding any money to these accounts. These are try to show you how you can increase these accounts without adding money to them. Now, come the let's just say this market totally crashes and we get fully vested. I was hoping to be fully vested by Memorial Day, or let's say next Friday before Memorial Day. But you never know what's going to happen in the market. I don't have a crystal ball. If you're listening to anybody that tells you where the market's going, they're full of shit. Nobody knows. So if you're planning, to make money in the market in the short term, by listening to gurus out there, they're going to always steer you wrong because it's always a 50-50 bet. Don't throw your money away. It's just, it's red or black. That's all you got to remember if you've ever been to a casino, red or black. So always know that you can take money out of the market by investing in dividend-paying stocks. Don't fall into the trap of easy money, quick money, gambling, lottery. Let's play some crap. Let's play some blackjack. Don't fall into that. That's the casino they want you in. Don't you can play outside the casino, and you can be the one that's pulling that money down. Be the house. Pull that money down. There's a lot of interesting commentaries out there on options and futures, and they it's like they throw it in your face just to try to get you to um, play along with their game. So play your own game. Find the dividend-paying stocks that you like or you understand. If you don't understand it, sorry, but the course is going up. I gave people about 6 months. We had quite a few people take advantage of that, and I'm sure they'll be happy after this. But it is going up to $89.95. And I do help people try to get through it. It's not an easy thing. It's not a hard course, but understanding what you're doing for money management is going to help you a lot more than learning how to get some newfangled idea on, hey, if the price crosses this moving average, then buy, and then sell when it's at this percent. It sounds easy, right? But it if you're not looking at your risk and how much money that you've actually got, you're going to be throwing it away because you're going to be making transactions that you can't recover from. You got to keep them small. You got to keep each one of your transactions small in relationship to the size of your account. Okay, so if you've got 25K, day trading limits apply to you and everything else, but we don't worry about that with this system because majority of your trades are going to take longer than a day. If you get one or two that happens in one day, it'll never affect you. But if you're just starting out and you got $5,000, you learn this system in 5 to 10 years. If you're adding money to your accounts because you're working and you're being responsible, you're living without debt. Don't even bother with this program until you get yourself out of debt, because all you're doing is compounding your problem. If you can't manage money, you're not going to do well at this in the market. That's my whole thing. Is if you got debt, don't even bother trying to do anything in the market right now. All you're going to be doing is compounding your problem, and you'll make decisions that you wish you hadn't done. But I'm not a financial advisor, but I do have a lot of experience. Seen a lot of people get burned. I'm fully debt-free, have been for 15 years. Understand that that's what they want you to be, is in debt, because you make worse decisions or not so good at decisions when you're in debt, because you're always trying to get above water, and they'll always bring you back down because they can adjust interest rates. They can make your life hard. Things come up. Life just happens. So take it slow. Don't be in a big rush. We're at a good time. We're a good point in the market right now where people can make some money, even on the way down. I'm not talking about going short. I'm just saying that if you follow the system, you'll see that you can be taking a little bit of money out of the market each week. And you're going to have that period of time where you're going to have nothing happening. But what are we at right now? Let's take it, since we're here, go down through a couple of the pages, so you can see that we're down. What's our normal? Okay, a winning month, 700. So we're about 4 or 5 days behind, about $200-300. So we're okay with that. Last month we're probably on track. We did a little bit better last month, so you can see this month is more than likely going to be below what our expectation. We're about half of where we want to be, right? 700 versus 1400. So, but that's okay. We're still positive, still hadn't taken a loss. But what's happening is we're coming down and we're adding or dollar cost averaging into our positions. What's happening is your dividend accumulation is going up. So depending on the month, and what's paying in that month, because remember you got quarterlies. Your monthly should be pretty static until you start adding more to those. Remember the max shares and everything else. Take a quick look. Where are we at? I'll kind of bounce all over the place here to try to get all this in real quick. Let's go to the next page. Say cryptos. Yeah. So nothing going on in cryptos. Let's go over to, yeah, I didn't update that, but it was 0 for the day for profit. So we've had, let's see, 1, 2, 3, 4 days with no profits and 5 days with no dividends coming in. That's just when they're due, when their due date or their dividend pay date is. I've gone over this before. So yeah, I hadn't made any money off crypto since March 27th. Just static. Everything's static. You don't throw more money against something if you don't know what you're doing. We had no CEO. Some people want to just ride the coattails, and that's fine. I don't mind people, if you're going to trade off what I do. But if you don't understand what I'm doing, it's going to hurt you in the long run. I mean, if you're buying dividend paying stocks, you will collect dividends, but you're going to make more if you understand how the system actually works. So, taking profit and taking dividends in each month is just half the equation. The other side is the profit taking part, and that's where our scans come in. But if you have any questions about your own stocks that you want to invest in, maybe I can give you some guidance in it. I'll never tell you what to buy, what companies to buy, because I have an algorithm that gives me my scans. You're more than welcome to check it out. And the scans are fairly cheap, and you can ask me any question at all. I'll always direct you exactly what I do, but I'll never tell you what to buy. So if you've got something that you want to look at, you want to find out what kind of max shares, say, I don't know, let's look at, I don't invest in Netflix or anything that doesn't pay dividends, so we'll just look at that. But what's the other one? Walmart. Okay, we've had that on scan before, but it hadn't been on our scan for a while, and it's interesting. Well, why didn't it come up on the scan? Well, there's reasons behind it. But anyway, so this one would fit our criteria because it would, if you take 56 cents by 4, so 224. We're looking for $1.20 per share per year, or yeah, $1.20 per year per share. So that's our minimum requirement to hit our scan. So there's a lot more that goes into it than that, just that. But if you're looking at something like this, you look at the max shares. If you need to know what the max shares is, this is a risk parameter that I use. So it's based on the size of your account. So once you get over if you got to go back into some of my older videos, I may put it up again. But if anybody's got a question of where the max shares start and end, and what the monetary level is in each one of your portfolios. It's not a cumulative, okay? It's a per portfolio. This is how you control portfolio risk. So understanding what those numbers are will greatly benefit you in how you approach the markets. But you're just throwing money saying, okay, well, I think here's this is what I hear all the time. You can, it's all over the internet. Okay, hey, go ahead and buy Walmart now, because this candle, it's a red candle. Like, look, it's down. What's the percentage here? It's down 20%. Go ahead and buy it, right? Well, might be a good time. I don't know, But if you're just basing it off some visual cue that you're getting, you're making a mistake. Don't trust these charts. This doesn't mean anything. All this does is tell you what the price was at the start of the week, right? That's where it opened, 149.45. We'll get it accurate. So it opened 149.38 and it closed at 119.20. So that's a pretty steep drop, right? 30 bucks. So if you're just basing it off of that, indicators, all this kind of stuff, you know, the RSI's out there, I haven't even looked at those in years, but all of these indicators that are out there, yeah, you can use them, and you have to be consistent with them. But the main thing that's going to get you is if you don't have good money management risk. If you don't understand that part of it, I guarantee you, you're always going to be behind the 8 ball. You'll get lucky. Remember, it's a 50-50 game. But I'm going to take, if you took your $5,000 and said, hey, I know for whatever reason, I got $5,000 and I divide that by 109, let's just say 119. So you can buy 42 shares. And what are you going to make it? What was that? 42 shares. And we got 56 multiplied by 4. So 224 a year times 42. Now, if the market goes down from here, right, and they continue to pay dividends, you'll make $94 a year off that $5,000 investment. So if we divide that by 5,000, that's equal to, multiply that by 100. That gives you 1.88% or 2% per year. So you got a 50-50 chance of it being right by investing that 5,000 at this 119. You get 42 shares. There's nothing wrong with it. I'm not going to tell you not to do it. I'm not going to tell you you should do it. I'm just telling you there's a better way. And if you want to learn that, that's when you take the course, you understand what the money management is, you can thank me later. But that's how we go about not losing money. But let's put it this way. Let's say you got in at 5,000 and you're new to the market and this sucker goes down to 60. So you're looking at it and you're saying, man, how long is it going to take me? So we know what the rule of 72 is, right? And so if you're making 2% a year, and that, let's say Walmart, I don't know, for whatever it goes out of business, I can't see the future, divide that by 2%, right? It's going to take you 36 years to double your money. Okay, we want 12%, right? So 12% divided by 72, or 72 divided by 12, it's 6 years. Would you rather double your money in 6 years, or do you want to double it in 36 years? 36 versus 6, I don't know. You think about that. Anyways, what else did I want to cover here real quick? I think that's about it. But yeah, check it out. Have a good weekend. I know you guys over on BitChute get this kind of late. I can't do anything about that, but if you want to follow it, you best just go to the dividend collection team and watch the live videos, or if I post a new video, it'll show up there, or just subscribe to it. That way you'll always know when a new video comes up. But BitChute's cool because it brings new people in, but it's definitely got a lag to it. It's not live. So anyways, that's it for now.